right, this is Mackey's Retail Roundup Live. That's Jeff Mackey. I am Spencer Israel, Stock Market TV. Mr. Mackey, we are talking this week about maybe a bottom being in? Question mark, question mark, question mark. I don't know. I have the questions. You know the answers. Let's get right to it. I've got a chart of the XLY here. This is a chart that you made, and it looks
It
pretty
is, I
impressive.
mean, does it count as a retest? I don't know. It's everyone's of two minds. I'm among those. If I had the answers, honestly, don't trust anyone who says they have the answers right now because stuff is changing like on the whims of social media urges. We live in unusual times. No one has the answers at the bottom, which we'll get back to. That's not necessarily a bad thing. It's always murky at the bottom. So you kind of look at price action. You kind of look at you look at what's happening in the tape, and you see the response of the market. Can you hold on 1 second, Spencer?
Yeah. We're in a fast
Okay.
market here, guys. We got retail news. We got Netflix. Maybe I should have talked about what we're going to talk about today. We're talking about this bottom here. Maybe the bottom being in. We're going to talk TJX, which I believe was it Thursday or Friday?
It's
TJX
making
was
all-time highs every day.
yeah, but
I'm
it was
back.
one
I'm
of
back.
it
Right?
was one of those days. One of those days. It was the only stock in the S&P to make a new all-time high. Maybe that's still true. I'm not really sure. That was wild. So we'll talk about that. We'll talk about Costco. We'll talk about Netflix, and talk about
I'm
Nike.
back.
So
People are done
okay.
calling me to let me know that I'm on live video. That's probably the message there. And if so, hey, thanks for calling. Please stop. So where were we? Listen, we had a huge retest, and
Yeah.
we had kind of our three things we needed to make a bottom. They change all the time. This is both the best time to be a pundit on earth and the worst because you're looking at a market that changes. You're halfway through a column, and all of a sudden there were no exclusions. There are exclusions. You're kind of at the whims of what the tapes are. But the point is, and we've talked about this being a process a lot, we're at the stage of the sell-off where people are angry and they're kind of accepting that we live in just a super screwed up world. And they've priced in a little bit of a disaster, but not entirely one. One of the three things that I wanted to see was kind of a pathway out of the darkness, like an idea that any type of thing you can clutch to come up with a scenario that doesn't drop us into just a ridiculous recession because you've shut down every single supply chain on earth. Like the idea that only China is shutting down is sort of silly. If you're a retailer with really thin margins or even some with fat margins, you can't just order product when the price on it's going to change in terms of the tariff by 150% between the time you order and take delivery. Like this is not a really hard concept to wrap your mind around. If you don't know your monthly expenses within like 50 or 150%, you probably have a cash flow problem. So no retailers are going to work. But what we saw over the last week was the idea that the president's going to budge, that it's not this sort of Mad King scenario where he's just going to burn the world down and hope it works out. And that's kind of all you need. I mean, it's with a lot of these stocks anyway are down 30-40%. The indices themselves are down 20%. I mean, most of them are in a bear, not all of them. The S&P does that cute thing where it goes down 19 something percent and then bounces. But, sometimes that's enough. It didn't break. There's obviously still a bearish scenario out there. There's obviously kind of the most obvious scenario is this is really bad. Earnings are clearly going to come down, but at some point that's known. The reason we look at charts and the reason you pay attention to price action is because the stocks turn way before the fundamentals do. And you're trying to kind of shorten that gap between when you get long and when you find actual proof that you aren't an idiot.
Yeah. So all right. I don't know if we definitely don't have all three of those things yet, right? Jeff,
Not even close.
we've gotten the technicals and we've gotten, I guess, the narrative, right? I mean, 90-day pause
You're
sort of
starting to get one. I mean, it's not a good narrative, but again, all the rallies, it's if you run through kind of, if you like to be on X or Twitter or whatever you call it, run a search and just, search for most hated rally ever. And what you'll see is every single bounce since the history of time in the S&P 500 and the history of social media since about 2009, rallies always seem dumb because the news always seems the worst at the bottom. You look at the COVID bottom. Did it seem smart to buy discretionary in March when the whole world was getting shut down? That was just a crazy ass trade. The entire premise of that trade is shit usually works out. Like I realize we're shutting down the whole global economy.
Right.
That's a problem. It's not in anyone's models. I guess estimates are probably going to come, probably have to drop those estimates a little bit if you shut down every single store in your chain. And it worked out pretty well. It was an all-time buying opportunity, as a matter of fact. And largely, there was not a great solution that came out of it. It was just sort of the consumer's adaptable, the public's adaptable, the system usually holds up, and it always seems like it shouldn't. But it's a 270 odd year bet that if you buy the darkest parts, you win.
Look, it's a cliche, right? But they do say the market is a forward-looking discounting mechanism, right? And it's a cliche for a reason, just because it is, right? It is. So
yep. And let your winners run is also a cliche. And eventually it works out okay for America. Is a little hackneyed. It's a little embarrassing. It's a little Jerry Bruckheimer movie type of thing to embrace. And it seems much smarter to be super bearish, especially right now. We're on the verge of a trade war. But you know what? The chances are this isn't the time that an asteroid hits the Earth. America loses its dominance. We don't become the reserve currency of the world. And, it's if I'm wrong, then we got bigger problems.
All right, let's talk about the one retailer that was bucking the trend last week. As I said, TJ Maxx making new all-time highs. It was the only stock in the S&P making new all-time highs last week. When I saw that, I was gobsmacked, Jeff. Gobsmacked.
I love gobsmacked. My compliments on gobsmacked. Yeah. And also, I think JC would agree with this. It's super bullish, all-time highs. Like all-time highs are generally really bullish. Usually only stocks with a really solid trend are making all-time highs. And there we are, TJ Maxx. You want a narrative. You want technicals. Well, I just mentioned technicals. All-time highs are super bullish. That upward and to the right thing that you're seeing, that's good. You want that. And TJ Maxx, they have no real exposure to anything other than other people running out of clearance merchandise. Like TJ Maxx, they don't deal with the tariff side of things because they're buying stuff from Kohl's because Kohl's has to get rid of crap on their shelves because they're running out of space and they're screwed up 1,000,005 different ways. TJ Maxx so it's a great business model. And what you're seeing is a movement to companies that benefit from maybe not great economic times, but not a disaster, which seems like an appropriate way to handicap a completely self-made recession that we're trying our very best to just inflict on the entire world right now. It seems to be like maybe somewhere in the middle. Maybe there's not a complete plunge. You're seeing TJ Maxx. We talked about Costco last week. Costco, they reported same-store sales, just like we said. They've added, Spencer, and this was exciting to me. Before you would call in an actual phone number and listen to what sounded very much like the beginning of Rockford Files, which was a TV show probably before your time. But every episode opened with someone calling Jim Rockford and leaving a message on his recording machine, which was just a little tape deck that you had hooked up to your phone. It was amazing technology. My God, I miss the 70s. But that would be how you would get your Costco same-store sales for years, up until like a year ago. Now they've got a link.
Don't you mean Don't you mean Price Club same-store sales, if we're being accurate?
Well, they've been a lot of things, but it arose by any other name. It's still Costco giving you same store. It's still some guy reading a speakerphone under fluorescent lights in some basement of an office someplace. Yeah. And what he was telling you in this case is what we've heard from kind of Walmart. The people taking share, they're like, yeah, your international concerns, we really don't give a crap, or at least we'll be fine otherwise. Same store sales of 7.5%. For March, that's pull forward. April same-store sales will be good, and May they're going to absolutely just face plant. Everyone assumes that, but what Costco is showing is a resiliency that other retailers don't have. I've got the thesis. If we look at the Walmart Target spread, Walmart Target and Costco, you see things have been tough for old Bullseye there.
Wait. Why would the May same-store sales be bad?
May sales are going to be bad because that's going to be when you see the consumer, all the pulling forward we did. I don't know if you went out to the stores, but over the last couple of weeks, there's been a huge amount of just kind of hoarding, people trying to get in front of what they perceive as the tariff price increases, some of which are already starting to happen, some of which aren't. But here's the thing, and I'm not being alarmist. This is just how business works, and it's weird that I should have to explain this to the administration, which is full of guys who supposedly know a lot about this. But in this level of uncertainty, as mentioned before, business just freezes. Like you just can't order. If you run, a t-shirt shop, from a t-shirt shop to like Viore, if all of a sudden your cost of goods sold is going to be 145% higher, I mean, that's just a non-starter. But if it's going to be anywhere in that range, you just don't do business. And so you're going to run out of stuff that's inventory. You're going to run out of stuff on the shelves, and you're also going to have a consumer that's being a little tapped out because layoffs are going to start really soon. Because the supply chain's already frozen, you have a delay, but not much of a delay. When they stop shipping Land Rovers to America, as they did, what they're going to have to do is shut down the Land Rover factories. Shocker, that's a huge surprise, but everybody that unloaded the Land Rovers then drove them to some freaking car dealership and sold them. Times aren't going to be great for them because there's nothing coming in. So we're going to, you're just going to see an economic slowdown. It's almost a necessity from about two different directions. From the direction of demand, because everyone's going to be a little worried about getting laid off from their job unloading Land Rovers that were coming in. That job, as mentioned, goes away. And there's a lag before we're going to build our supercomputer factories that the president seems to be thinking are coming on board. There's going to be a lag of infinity years, Spencer. That's how long it's going to take to build those factories.
Fair enough. So anyway, bringing it back, Costco and Walmart obviously doing one thing, Target doing another.
It's all about the deep pockets. And so again, you get to neither of these companies is well positioned for the Great Recession Part 2. That is a non-starter, but of an economy of a certain level where margins are being pinched. Walmart and Costco and Amazon, to a degree, they just have margin coming from other sides of the business. They can afford basically to kind of out survive the traditional retailers. Target's just a proxy there. Poor Bullseye died, so others may live. But Kohl's is in a worse shape. There's plenty of companies that are actually in worse shape. But Target's a proxy for a largely still traditional retailer. They tried to get online more. They really aren't. It's still a company where people shop there. Their advantage largely comes from their private label margins, which they kind of need a good economy to make a lot of money from that. But if all of a sudden your t-shirts have no margins, Target doesn't really have an investment thesis. And they can't afford to eat those price increases for very long because that's where all their margins come from to begin with. And so all of a sudden, the margin expansion story that Target's been trying to cling to for the last 2 or 3 years, that goes away. And so you're seeing a spread, not just here, but if you look at Kohl's, I mean, honestly, the other reason I use Target is because they're holding up better than others. And, that's kind of, it's the other ones almost seem like just beating companies to death. You hold up a chart of Abercrombie or Lulu or these other companies that are so levered to the Asian markets, they're just merciless. The slaughtering is just continuous. These charts should reverse for the last, if you look at like a 20-year continuum of Target versus Walmart, it's usually been a pretty good buy to kind of short the one that gets too far on top and get long the one on the bottom. I don't know. Again, if you are a big believer that these cycles kind of repeat, then you're great. But if you think that it's a situation where something has truly fundamentally changed forever on these stocks, you got to be along the big three, Target, Costco, and Walmart. And in terms of convincing me to buy another big box retailer, man, it's going to take a while. You better send slides and a really good explanation.
Real fast, I want to go back to Nike. We were talking before we started here about the Masters, so I just wanted to give you props on your charts and your pictures of Rory here. Nike, obviously one of the few companies with, exposure to events like that, but was there anything you wanted to say about it?
Well, Nike should win. So it's if you're Nike and you see all the chip exemptions and you make like 90% of your shoes in Vietnam, which are no longer affordable, you're still making almost 50% of your clothing in China, which is crazy. It's you got to be able to win somehow, and you're wondering why life is so unfair. I think Rory was sad. on the greens there at Masters. I think he was crying because of his ambivalence over he realized a lifelong dream, and yet his shoes that the Nike spent millions and millions of dollars getting him and the other guys who wear Nike on the tour to wear, they had just gotten like maybe 16 hours of coverage. How much Masters did you watch over the weekend? I pretty much was just like shoot it straight in my veins all weekend. I mean, my mom's calling me.
I watched. Put it this way, I didn't watch a lot, but it was an all-time high for me. All right,
It was
so
incredible. And you know, when Rory's brand new shoes, the $210 Nike Victory Tour, wear them and you'll be like Rory just slinging in 7 irons from 220 yards away. Those were sold out by Thursday afternoon.
wow.
And so is that a supply chain, or is that an are you shitting me to be that dumb Nike kind of question? It's not really clear. But my point on that, I guess the larger point in the retailers and consumer stocks you want to avoid, the guys who got caught by this that were in a turnaround, it's a really hard time to turn around a company like Nike. Nike has so many problems, among which are they don't make shoes for Caitlin Clark or Paige Buchers either. They make incredible ads. Nike had 2 different ads that made me honestly got a little verklempt, right? Like it was just so moving. It's like God, I want to buy those shoes. I want to wear flower shoes. I want to shoot golf balls like I did with my dad, and hang out with my kids. Like it was really an emotional sort of thing, and I'm sorry, but you run the ads to sell product, and if you don't have any product, and if I don't know if anything's ever coming in again, it's a really bad time. So it's Nike. This is a good example of a stock you can't touch yet, but B, just a business gone wrong where they spend so much time and just kind of fillet themselves with just this glorious self-regard over how smart it is to be emblematic of sports. And it's like, the idea is to sell shoes.
This is a great chart. This is a great chart. It's been well documented. If you're a fan of golf or sports, it's been 11 years, right, Jeff? 11 years since Rory McIlroy's last major, right? And this time, and Nike's flat since then.
Flat. If Rory's baby Poppy had been given shares of Nike when she was born, to send her to college, maybe Spencer, to put her through college, she would be now down about 65%. That's how sad this chart is. It's they're actually picking on this iconic athlete just by their ineptitude. It's tragic. It's an American tragedy.
Great American brand. We are rooting for them. I know we don't have a chart, but Jeff, I want to talk about Netflix for a second. They are in the news today. There was an article from the Wall Street Journal. They were citing an internal meeting last month with executives, and the WSJ says that Netflix says that they are going to reach $1 trillion and double the revenue in the next 5 years, end of the decade.
Don't doubt it at all. I've referred to them, and I just saw Josh Brown doing it on the TV there, but as a staple. And I think Kramer, I think that people are just coming around to the idea again, unless there's a depression, unless people are really feeling tapped, Netflix is the last thing they'll get rid of. It just has become a thing that you have, a staple. It's in the Starbucks, the Uber, these camp of companies that I think you have to own on any kind of meaningful pullback, because they just are things that Americans won't give up. And does that make them recession proof? Not really, but if this streaming thing turns out to be anything, and you know what, I think it is, Spencer. I think it's doing pretty well.
It might be.
I think there's signs that it's going to do pretty well. Netflix is just a winner, and the attraction they're getting with ads, that's kind of crazy. And the traction they're getting with upgrading away from the ads, like it's some kind of Black Mirror episode where you end up just giving every freaking discretionary dollar you have to the goddamn streaming service. I'm down with that because I really hate watching ads, Spencer, and I'll pay for that. And that's a good business. The only way I can fight that kind of inflation is by being long Netflix shares.
It's funny how Netflix was part of the big four. It was FANG for basically a decade. We had FANG. We had Facebook, Amazon, Netflix, and Google. For some reason, we didn't have Apple in there. I guess they were separate. But and then all of a sudden we just kind of forgot about Netflix and it became the Mag 7. Let's put Apple in there. Let's put Microsoft in there. Let's put Nvidia in there. No room for you, Netflix. Sorry.
Yeah.
It's like we all kind of forgot about Netflix, but they're saying not so fast. Don't forget about us, right?
Yeah, because they're not.
Tesla.
It's I maybe it worked against them that they sell something you can pretty much understand. Like everyone understands the magic, the way they understand kind of the magic of Prime. It's like, holy
Yeah.
crap, this is the place where everyone you comfort shop there. You shop there for convenience stuff. You have any idea how much business Amazon Prime does when people are drunk? It's incredible. Like you don't even want to run the stats. It's just the place we go. Netflix is like you want to come over and Netflix and chill is just synonymous with like an awkward way to ask people to hook up. It's an amazing business model, and it speaks to our prior point, Spencer, which is
Yeah.
America wins
That's
eventually. You
right.
just got to find the parts of America that wins because we don't all win at once.
All right. Speaking of America, here's the S&P 500. This chart is going back 50 years. Yeah, I guess go. I guess I love this chart because if you're panicky about the economy or America and its position in the world, all you gotta do is zoom out, and it doesn't look like much of a panic when you zoom out 50 freaking years, right? Of
And you
course,
talk,
there are those, Jeff, that look at this chart and they look at it like gravity, and they say, "Whoa, look how much room there is to fall." But we know that's not
yeah,
really how it works.
those are people in other countries, Spencer. And if other countries mattered, frankly, this chart
Right.
wouldn't look the way it does. It's the most bullish case, though, honestly. And I say this to my kids all the time because it's I always sort of crap like bet on America, and they're like, that's crazy talk. But over the last few weeks, I've gotten calls from them like, is this one of those times? And it's like, kinda. If you think things didn't seem dark during Watergate, or when we shot presidents in we shot, like
Things
the
are
60s
always
were
bleak.
dark, folks. It didn't seem like stuff was going to work out there with the commies on one side and Vietnam and the whole riots in the street. That seemed bad. COVID seemed horrible. The great financial crisis, no great shakes there. All this, but it turns out that capitalism is really amorphous. It really kind of adapts and shapes and moves along. I know that sounds dumb. I know it seems like there's no way this possibly works out with anything short of a trade war. But I think that I think you stick with names that are basically safe, that basically are like the Netflixes of the world, the new staples that people are still going to go to Costco no matter how things bad are, unless they get super duper bad, in which case, short everything and hide under your desk.
Jeff, I'll be making my monthly Costco pilgrimage this weekend, so I'll let you know how that goes. Colin in the chat asking about Ollie, and Colin, I don't know if you read Jeff's note from this morning, but Jeff did write about Ollie's bargain outlet in his free note. If you don't get that, there's two links in the description of this video. One is to Jeff's free note, which went out today. The other is to his paid membership, where you get access to his portfolio, all the trades he's making, what he's buying, what he's selling, what he's adding or deleting or watching on his watch list, and targets for all those names. That's in there as well. So get the free note. And if you want more, get Macke's Retail Roundup. And he'll put out a video on Thursday of what he's done in the portfolio this week. And you'll get that as a member. So check it out. Jeff, any final thoughts for us as we head out of here?
Yeah, it's just kind of play it cool, but look for opportunities. It's too late to short stuff, no matter how things are going to turn out. And I think things will be fine. And again, congratulations to Rory. And I hope he finds a better clothing manufacturer to sponsor his glorious self and child.
Awesome. All right. We'll see you guys next Tuesday. We're going to be right here every Tuesday, same time, same place, 1 o'clock, talking retail. Members, you'll get your video on Thursday with Jeff talking about his portfolio. We'll see you guys. Good hunting.